Welcome to the Deep Dive. Our mission is simple. Cut through the noise, dig into the details, and pull out the key insights for you. It's like your shortcut to getting up to speed. Today, we're diving into Amplitude's recent Q1 2025 earnings call. Tickers AMP. We'll break down the numbers, unpack their strategy, and look at what management is seeing down the road.
That's the plan. We've gone through the transcript to really pinpoint what matters for understanding Amplitude right now and their direction.
Good.
We'll kick off with the main results, then get into the nitty-gritty of how they're executing and what they expect.
Great, let's jump right in then. Q1 2025 results. Revenue came in at $80 million.
Yep, and that's up 10% year over year. Importantly, it beat the midpoint of their own guidance.
Okay, and annual recurring revenue, ARR.
They exited Q1 at $320 million, so 12% growth year over year there. And what caught my eye was the sequential growth, an $8 million jump from the previous quarter's end.
Got it. How about profitability?
The non-GAAP operating loss was $2.1 million. Again, they made a point of saying this was better than their guidance midpoint. Shows some, control on spending.
And retention. I saw a figure for sequential NRR.
Right, sequential dollar-based net retention, NRR, was 101% in Q1.
Okay, so beating on revenue, beating on the operating loss guidance, and that little uptick in sequential NRR.
Yeah.
Seems like positive signals, right? Just from the snapshot.
Absolutely. Exceeding your own targets, especially on revenue and the bottom line, always looks good. It shows they're executing. And yeah, 101% sequential NRR might not sound earth-shattering, but context matters. Management really framed it as proof they're starting to turn the corner on churn and contraction issues that were a problem before. So it's a positive indicator.
Okay, makes sense. Those are the headlines. Let's unpack what's behind them, what's the strategy, what's driving this. They talked a lot about re-acceleration.
Yeah, that was a big theme. They basically said, okay, we're back to double-digit growth. Now the focus is pushing that higher, accelerating further.
And that $8 million sequential ARR increase we mentioned, that's the early evidence of this.
Exactly. That's the tangible result they pointed to. They said it's mostly because they're past the worst of some big contract churn from prior years. Plus, they landed some good new enterprise deals, and the newer products are starting to contribute. They were pretty clear, it's good progress, but it's just step one towards where they want to be on growth.
And drilling down into that, the enterprise segment seems critical here.
Totally central. They highlighted customers paying over $100 Ks a year in ARR. That group grew 18% year over year, reached 617 of them. And here's a key stat. Almost 2/3 of their total ARR is now from these big enterprise clients.
They even set up a special team for that, right? A strategic accounts team.
Yep, focused on their top 30 existing customers and top 30 prospects. And they're saying it's already showing some early payoff.
So why is this enterprise focus so important for someone watching the company?
Well, it's pretty straightforward. These deals are just bigger to start with, obviously. But crucially, they have way more potential to expand over time. You sell more seats, more products into these large organizations. Landing and then growing within these big companies is really the foundation if you want durable, accelerating growth. It shifts your focus to customers with a much larger potential lifetime value.
And this connects to their big strategic push.
Yeah.
2025 is the year of the platform.
Right. The whole idea is to make Amplitude the place for digital analytics end to end. Get customers to ditch various point solutions and consolidate onto their platform.
Is there evidence that's happening? Multi-product adoption.
Yeah, they shared some numbers. 30% of all their customers, and get this, 64% of their total ARR comes from customers using more than one Amplitude product. And maybe even more telling, 42% of the new enterprise deals they signed in Q1 landed with multiple products from day one.
Okay, so the platform strategy driving multi-product deals, how exactly does that help the customer consolidate and get more value? It's not just Amplitude selling more stuff.
Yeah, no, exactly. It's about enabling these integrated workflows, which we'll probably touch on more. It offers things you just can't do easily by, gluing together separate tools. For the customer, it means fewer vendors to manage, often lower overall costs compared to multiple tools, and critically, a more complete view of the whole customer journey, acquisition, product use, retention, all using the same underlying data. And for Amplitude, yeah, multi-product customers are stickier, and there are just more ways to grow that account revenue over time.
Speaking of sticky, let's talk retention again. Sequential NRR was 101%. Trailing 12 months, TTM, is still 98%. They expect NRR to go up through 2025. What's improving it, and what gets that TTM number properly over 100%?
So the improvement they're seeing now comes partly from fixing some structural things in their sales approach over the last year. But a big piece is just less contraction, fewer customers scaling back their spend compared to last year. That's been a major headwind easing up, getting that TTM NRR significantly above 100%. That likely needs more than just cutting churn. It needs them landing bigger expansion deals, multi-million-dollar expansions within that existing enterprise base. They see progress, but it takes time.
Okay. Something else that really jumped out in the numbers was RPO, remaining performance obligations. Big acceleration there.
Yeah, that was striking. Total RPO growth accelerated to 30% year over year, but the long-term RPO contracts beyond 12 months that accelerated even faster, 72% year over year.
72%. Wow. What does that signal?
It's a really strong signal, I think. RPO is basically booked business they haven't recognized as revenue yet. That huge jump in long-term RPO directly reflects the enterprise strategy working. Customers are signing longer deals, multi-year commitments, because they're buying into the platform roadmap. For Amplitude, it means more predictable revenue further out, better sales efficiency. For investors, it's a sign of increasing visibility into future revenue streams.
Okay, let's switch gears a bit from the financials and strategy to the actual products. There seemed to be real energy around some of the newer offerings, guides and surveys, for instance.
Oh yeah, they spent a lot of time on that. Said it had incredibly strong performance, rapid uptake right after launching last quarter.
Faster than previous launches.
Faster incremental ARR in its first quarter than any previous product launch. That includes things like experiment and session replay, which were considered successful. They said it's actively replacing standalone tools in customer stacks already. It's becoming a key part of that platform story in action.
Why do you think it took off so fast? What made it resonate?
They gave a few reasons. One, it wasn't built from scratch. It came from the Command AI acquisition, so it was more mature at launch. Two, the price consolidating often saves customers money versus separate survey or guidance tools. But the killer app, really, seems to be the integration. Using Amplitude's deep behavioral analytics, knowing exactly what a user is doing to trigger personalized guides or surveys right in the product, that's something standalone tools struggle to match. Oh, and they mentioned mobile guides and surveys are coming soon too.
Interesting. They also talked quite a bit about pushing more into the marketing persona. What's the play there?
Well, the thinking is that marketing leaders have more and more say in buying these kinds of digital experience tools. And marketers need to see the whole journey from the ad click through conversion, adoption, usage, all the way to retention. Crucially, they need to see it on the same platform product teams are using. Traditional marketing tools often create silos, they don't have that same granular user behavior data. So Amplitude is rolling out updates specifically for marketers, focusing on analyzing conversion, adoption, CLTV, retention, all within Amplitude, trying to eliminate those blind spots.
And the Twilio Segment partnership announcement fits in here how? Segment being a big customer data platform, a CDP.
Right. It's a strategic move. Amplitude is now basically Segment's recommended analytics partner. They have a lot of customers in common. Instead of Amplitude trying to build a full CDP itself, which they apparently looked at before, they're positioning themselves as the powerful analytics layer that sits on top of a CDP like Segment. Segment manages the customer data. Amplitude analyzes it deeply. It's about collaborating to serve those joint enterprise customers better.
Okay, to make this concrete, they walk through an e-commerce marketer example on the call. Can you break that down? It sounded pretty powerful.
Yeah, it was a good illustration. Imagine a marketer looking at ad campaign data in Amplitude. They see good clicks, but website purchase conversion is low. Instead of switching tools, they stay in Amplitude. They use heat maps overlaid on the web page to see where people are clicking or dropping off in the funnel. Maybe they spot confusion around the add to cart button. Then, right from that same view, they can highlight that button or banner, launch an A/B test using Amplitude's visual editor, maybe testing new text or placement. And finally, they track the results of that experiment in real time, still within Amplitude, to see if the change actually boosted conversions.
And the key claim was, you can't really do that seamless flow easily elsewhere. Identify, visualize, hypothesize, experiment, measure results, all in one place tied to user behavior.
That's exactly their pitch for the platform value, especially showing marketers how they can be more data-driven and work more closely with product insights without juggling a bunch of disconnected tools.
Looking even further out, they teased something called Amplitude AI agents. Sounds futuristic. What's the idea?
Yeah, the vision is pretty bold. They want to shift Amplitude from being just a tool you query to being more like a team of AI experts working for you. These AI agents would supposedly monitor your data proactively, figure out why user behavior changed, suggest experiments to fix problems or jump on opportunities, maybe even automate things like creating personalized user guides based on data patterns.
They've got an event June 10th for a closed beta, right?
Yeah.
You mentioned examples like auto root cause analysis, auto A/B test variant creation.
Exactly. And they positioned it quite strongly, suggesting this could be the first really meaningful AI agent in the data space that goes beyond just, generating SQL code. If they pull it off, they think it could fundamentally change how companies use behavioral data and, potentially create a serious competitive advantage.
And they sprinkled in customer examples throughout, didn't they? The Economist, Senta, Joe, and the Juice.
Right. Using different products, the platform, it's all about validating the strategy, showing real companies are consolidating, using the new tools like guides and surveys, optimizing with experiment, trying to make the narrative tangible with actual customer wins.
Okay, let's shift back to the investor angle. Financial outlook, guidance. What do they say?
So for Q2, the current quarter, they're guiding revenue $80.3 million to $82.3 million. Midpoint's about 11% year-over-year growth. And for the full year 2025, they actually raised their outlook, now expecting $329 million to $333 million in revenue. That's about 10.5% growth at the midpoint.
And importantly, they raised the outlook for profitability too, right?
Yes, crucially. They bumped up the full year non-GAAP operating income guidance, now expecting it to be positive, somewhere between $0 and $5 million.
So growth with leverage. A clear commitment to hitting positive operating income this fiscal year.
Precisely. And they talked about how expecting leverage, especially in the second half, from efficiencies across the board. Things like engineering work to make data scaling cheaper, sales productivity improving as new hires and products ramp up, G&A optimization, while still investing in R&D, especially AI.
What about the macro environment? Do they sound optimistic?
No, actually quite cautious. They explicitly said they are not assuming the macro picture improves. They expect it to stay challenging, expect buyers to keep scrutinizing software spending carefully.
Okay, so if they expect headwinds, how are they positioning Amplitude?
The message was, focus on what we can control, build resilience, execute flawlessly on operations. They argue that even with budget pressures, the digital channel is still critical for companies. And they feel their platform's value prop consolidation, efficiency, clear ROI resonates really well right now, especially when CFOs are demanding proof of value. They think companies are more willing now to make big moves to consolidate vendors and save money. They kind of contrasted today with 2022, suggesting the challenges then were different, maybe more about post-COVID adjustments and some specific large churn issues, implying they're better equipped now.
They also announced a share buyback.
$50 million?
Yep. Board approved. Management positioned it as a capital allocation tool, said they'd use it mainly to manage dilution from stock compensation, but also maybe opportunistically if the stock price gets really disconnected from what they see as fair value. It signals confidence, provides maybe a bit of a floor.
And just to close the loop on NRR, they still expect improvement through the year. Yeah, progressive improvement quarter by quarter. They were clear, though, while churn and contraction are way better than last year because of actions they took, getting big jumps in NRR really depends on landing those larger multi-million-dollar expansion deals in the enterprise space. That's what the strategic accounts team is there for.
Okay, so wrapping up the management view, it sounds like confidence in their strategy and execution, acknowledging the tough environment, but feeling they have the right plan and value prop for it.
Yeah, basically.
Right.
We know the world's uncertain, but we're focused on what we can do, execute, deliver platform value, innovate, and we think that's the path forward.
All right, time for our segment where we think about potential market plays.
That's it.
And let me stress this up front. This is purely for informational and entertainment purposes. It is absolutely not financial advice. Please do not trade based on this.
Just a thought experiment, nothing more.
Crystal clear. Okay, here's an outrageous but plausible idea stemming from this call. Given the really strong start for guides and surveys, they highlighted the fast ARR, the displacement potential within that sticky enterprise base, and combining that with the potential game-changing nature of the AI agents they teased, positioning it as uniquely powerful. You could, hypothetically, consider a long position on AMP. And the idea, maybe the market isn't fully pricing in how much revenue these new products, especially if the AI pans out, could really add, particularly within their enterprise focus.
Okay, the long side. What's the hedge or the other side of the trade?
Right, so to hedge against general market risk, or maybe specific execution stumbles by Amplitude, You could simultaneously think about a short position, not on the whole market, but maybe on a basket of legacy point solution companies. Think specific players in digital guidance or in-product surveys, maybe even some narrower product analytics tools.
So the bet is Amplitude's platform consolidation, turbocharged by AI, eats their lunch faster than expected.
That's the speculative angle. That Amplitude's integrated platform, especially with this AI layer, creates a value proposition that displaces these older single-function tools faster than the market thinks, giving AMP a competitive edge that isn't fully valued yet. And maybe that $50 per buyback acts as a small catalyst or support level along the way.
Interesting angle, but again, purely for discussion, not advice.
Absolutely, not financial advice, just connecting some dots from the call. Okay, let's wrap up this deep dive on Amplitude's Q1 2025 earnings. Key takeaways: solid quarter, beat expectations, clear focus on enterprise expansion and pushing that end-to-end platform vision.
Yeah, and strong early wins with new stuff like guides and surveys validating that strategy. Plus, that commitment to hitting positive non-GAAP operating income this year, even with the cautious macro view.
What's the one thing that really stood out to you from the whole call?
For me, it was that constant drumbeat about controlling what they can control. The intense focus on execution, on delivering the platform value, on product innovation like the AI agents, basically saying the macro is what it is, but these are the levers we're pulling, and these are what will drive our growth. That internal focus in a tough environment felt significant.
That focus is definitely telling. Okay, here's a final thought for you, our listener, to chew on, especially thinking about those AI agents. If Amplitude really delivers on this vision of proactive analytical AI, something genuinely beyond just code generation, as they claim, how could that fundamentally change the whole market for digital analytics and product tools? And if they pull it off, is the market truly grasping the potential competitive moat that could create?
Definitely something to watch as that AI story unfolds.
And one last time, this deep dive was for informational purposes only. It is not financial advice. Thanks for tuning in. We hope this gave you a clear, structured understanding of Amplitude's latest quarter and outlook. Feel free to explore more or suggest topics for future deep dives. Until next time.